Hello friends, good weekend. Vladimir here, and this is a weekly forecast for the week of 17th of August 2014. Well, despite the fact that many traders and private traders are on vacations and holidays, it seems like the market is preparing the ground for, well, how I would say that, special autumn time. Okay, summer is about to end. We are about to enter the autumn, and that's why I think it's better to be ready this week and the weeks to come right after that. If I read the charts correct, things are about to happen. It's gonna be fun and definitely worth to be there. That's at least from my point of view. So, what can we expect this week and for the next period to come? Let's start. First, of course, fundamentally, week begins pretty quiet, even though I think Monday might turn to bring some volatility. Why? Because of expectations for Wednesday, Thursday, and Friday to come. Why? Well, on Wednesday, I'm going right there. First of all, on Tuesday, we have to pay attention for Mr. Stevens' speech. We know lately it affects the Australian dollar. Then on Wednesday, we have FOMC meeting. Very important. We have very important rate votes in Britain. We have flash manufacturing PMI in China. And then on Thursday, the celebration begins. All the leaders around the world will meet in Jackson Hole Symposium, and they are going to discuss about all the situation and most likely how the world is getting ready for the day when they will have to start and increase the rates. They want to deny, they want to avoid the conversations about it. They want us to think it all is good. Well, friends, the sensitivity of increasing rates on countries like USA and Europe and probably even Britain could lead for very wrong effects on the general markets and on public money. Public money is, well, around 60-70% or something like that is on stocks. Okay? I know I'm not the first to say it, of course, probably not the last one, but this is where the sensitive situation began. Okay? When more and more money goes to the same place. Now let's go to back to chart, and let's get ready for the things we should be trading. Let's start with the majors. Euro dollar. Well, from one side it looks like this pair wants to bounce, but right from the other side, according to weekly chart, according to monthly chart, euro dollar has more to go down. From one side, 135 is a fair price for the euro dollar. From other side, Draghi must find solutions, as even Germany right now, according to last week report, is stepping back. So the idea how to trade it, well, I would go and do it this way. As long as last week low will hold, I think we can go and try the euro dollar attempt and try to buy it. I definitely think 134.50 up to 135 is reachable area. I think maybe even a bit higher, just to prepare the ground for the next sell. If we take a look on the 4-hour chart, the end of the week kind of hints that we are getting ready for a possible break. I know officially it didn't break it yet, but it's preparing the ground for it. And if you ask me, this kind of rise of lows on the 4-hour chart, preparing the ground for a special rally to come. So if it managed to break it up, okay, something like break, drop, I think it was to go up try this up, protecting last week low or at least the trend line low. Okay, so with a small risk, we can try to enjoy this rally to come up to 135 area, or at least very, very close to that. That's my view on the euro dollar. After that, I think euro is definitely going to look for top, and very likely within a week or two, according to the weekly chart and the monthly chart, continue with the drop. Okay? If last week low will be broken, we might start to reanalyze the things again and maybe considering continuation of bearish move, but we will have to watch that, of course, and that's why we will follow that on a daily forecast. What about the pound dollar, the most dramatic pair, right? Isn't it? We have double doji right now. Double doji could be a reversal pattern or could be simple continuation pattern. According to weekly chart, it's about to continue, or at least stop for very, very temporary. I think we should try to buy with very, very, very small risks, because if the correction will come, we better be there, as the protection could be very, very small with much bigger potential, right? We can risk like 20 pips in order to gain 100. It could give us like 1 to 5 risk reward. I think it's definitely worth to be there. I do want to make sure that it managed to break up here. It had, it tried, okay, a few times during last Friday. It never did. If it managed to do so with a small protection below this low, let's say very, very small, tiny protection, we could start to see a retrace. How deep this retrace could be? Well, it could take us back to 168. It could take us back to 169, which I believe the pound dollar is able to do. And if it goes lower from here, I do not think it's going to be too big. I think the reversal zones anyway very, very close. Maybe 166, maybe a bit lower around 165 or so, but I don't think it's far. I think a reversal is coming. Therefore, I would be preferring personally watching for buy opportunities in the short term with amazing risk reward, not like risking 20 in order to take 20. No, risking 20 or 30 in order to gain 100 or 150 or even 200 points, depends on how deep it will go, and until we get opposite signs. Okay, and that's why I say after that I would definitely want to become more bearish, as I think pound dollar should revisit 164 or so. But as for now, I think time to look for possible buys. Okay? How about the cross in between them, euro pound? I think every drop down should be opportunity to buy. You know my bullish view here, right? As long as this trend line will be respected, and I think we're the final target for this rally should be very close to the 200 moving average on a daily chart. That could be around 081.50 or so, or a bit higher or a bit lower, depends how it's going to operate. So every drop down followed by bullish divergence, like if we get a drop here and we create a bullish divergence, it's time to jump in. I believe this pair is going up as long as the trend line is protected. Same I believe is going to happen with the pound franc, which should continue to below 150, and every rally is opportunity just to join the sales. Now, what about the other majors? Australian dollar is flirting the 20 MA on the daily chart. From other side, it has a trend line, and it has a bigger trend line from top. Now, I will make it very simple. As long as Aussie dollar will remain below 0.9390 or even 0.94, I think sell rally is the most is the best thing to do here. We might see one more push to the upside. We could go and get closer to the levels I've mentioned, but I think it's just to prepare the sell one more time after that. I think as long as the levels I have mentioned will hold, Aussie dollar will remain under bearish pressure. only if it will break the levels I just mentioned, above 0.9390 or even 0.94, then we most likely have to become bulls about this pair. And for the New Zealandian dollar, I think this pair also preparing the ground for a rally. Now if we take a look here, we had a wedge, okay, right here. It was broken, and as long as it will be respected, and according to daily chart, 4-hour and 1-hour chart, as long as it will hold above 0.8450, which is this bottom and this trend line, we should be looking for buy opportunity. Now take a look. We might complete ABCD back to test the line and then jump in a buy, or we simply could get a New Zealandian dollar creating triangle and breaking it to the upside right after that. And if I read the chart correct, we should see the New Zealandian dollar rallying, well, at least to 0.854050, and I personally think we should see the pair rallying again towards 0.86, or at least very, very, very close to that. There was a trend line that I believe will be retested, this spike trend line, and this is why I think New Zealandian dollar could provide this opportunity I've just mentioned. So I remain long as 0.8450 will hold. Break below it will turn me neutral, maybe even bearish again. And again, I will definitely talk about it on the daily forecast to come. Now what about the dollar Canadian? Those of you who follow me on the signals know I've been bearish the entire week about this pair. It finally did a drop and reached the bank zone we talked about. The question is what's about to happen right now. I think, and again, I think this pair is preparing the ground for buy. And I will make it very, very clear and simple. As long as the pair will hold above 108.25 down to 107.90. This is very critical area if you ask me. As long as it will hold above it, I would be looking for buy opportunities. There is a trend line right here. A break above it should give the call for bulls. But what I would be looking to happen actually is let it drop or sideways as long as it wants. I want one serious rally to come. Then I want double wave correction to the downside on lower time frames, and then go for a buy. If the pair will create this reversal, I think we could see the dollar CAD reaching finally new highs above 110. Right? So I think it's pretty cool opportunity. Now for a very interesting pair, euro against the franc. I was looking last week to go into a buy here, very serious buy, but it did break 121. Now, from one side it's warning sign, right? But we should remember that the central bank in Switzerland want to hold 120. RSI is reaching extreme for the very first time since 2011. We all remember what happened right after that. The dramatical rally that happened after that, that caused intervention and this long-term ugly move. I think Euro franc is building a reversal point. On a daily chart we will get most likely extreme or very close to that. On a 4-hour chart I want to see a divergence forming, and then go and buy against 120 should provide, if you ask me, wonderful rally at least back to 122, if not even to 124. I think it's great opportunity as long as the central bank from Switzerland will keep the 120 as their reserved level. Pay attention for that. Could turn to be really great opportunity. Wait for the divergences to happen. Combination of two time frames here would give you the sign to jump in, and that could be really great chance. Now, what about the other opportunities, like some crosses? One of the greatest from my point of view is pound Aussie. I think every rally, small or big, that will come, as long as this trend line will hold, should provide a sell opportunity. According to weekly chart and a daily chart, we should see the pair dropping down to below 178 once again, probably 177. And I personally think we are going to below 176. So get ready. As long as this short trend line holds, pound Aussie should pay great. Every rally to come, jump in and go for a sell, as long as we will do respect the trend line and the levels above it. The down move here should be really, really great. Now, I've been asked about Kiwi pairs, and really I'm not quite convinced about them right now. Not the pound Aussie, not the euro Aussie. I think they both are about to create bottoms very soon and rally again, but I think we have much better opportunities than that. Okay, so really, really careful. Aussie Canadian, from my point of view, preparing the ground for one more push. Pay attention for this triangle forming. Oops, that's not the line. Here we go. Okay, we have this kind of consolidation, whatever it is, forming, and we want a reversal and a break, and then we can go and look for a sell. Daily 20 MA, sorry, daily lower band of the Bollingers, of course, should be our first target, a reversal from here. If it breaks it to the upside, let it go, because that could create the final rally above 102.50, and then we will be looking for jumping in with the next divergence to form. Now, sell anyway, whatever it creates a top, or whatever it creates a reversal from the top of the triangle, and reverses to the downside, aiming at least the lower band of the Bollinger Bands on the daily chart. And now a bit about commodity as well. Gold and silver, I don't find any opportunities on these two. I don't think they worth to touch. I believe silver will be bearish, but how far? Well, I think it should drop to 16 or 15 to provide a monster buy after that, something like that. And one more drop, and after that, buy all in, something like that. Gold should follow, but really, as for now, I'm not quite convinced about them, these two. I will want to follow them after FOMC and Jackson Hole Symposium meeting. After that, I believe we'll get clearer situation. But there is something I would definitely want to trade, and that's indices. Pay attention to them. They all are creating some serious reversal signs according to weekly, daily charts. The only ones remain strong is Nasdaq, but even this one creating a monster divergence on the monthly chart. Very, very hard to describe how strong it is. Okay, every hint about rate increasing would start to cause dramatic moves. I would be looking only for sell opportunities on all of them. Okay, but choose your one. S&P, the most conservative. Nasdaq is mid-risk. Dow is the most volatile and the biggest risk. DAX together with Dow Jones. They pretty much share volatility. Be careful. Don't expose to all of them. Choose your one or two, and they should be good. Oil, I think, is starting the reversal, especially after the reaction on Friday. As long as the last low will be respected right now, drop downs here should be opportunity to go into buy. I think on the short term we should be going back to 99 or above it. On longer run, I think if this is the real reversal point, I think we might see oil start to rally again, maybe for new highs, who knows. But for the short term, as long as last low will be respected, that's the most important thing right now, we should be looking for reversals. Remember this ABCD I was talking about on the last few weeks? It was completed last Friday. From here, as long as this law will be respected, we could expect a rally to happen. Buy pullbacks, that should be great opportunity. And as for investment, those of you who want to jump and hold, I think corn and wheat are something to hold. Corn with lower risk because it's closer to zero. Wheat is mid-risk. The next one could be soybeans, but of course we don't want to expose to all of them. I think that on the next several months, they all will start to rally. When exactly, I have no idea. Maybe this summer, very likely, because summertime is, well, volatile during most of the months. But let's see. Okay. Anyway, I think the patterns they create and the divergences they create, well, it's something. It's so rare. Yeah, so when the reversal happens, I know I want to be in. We are going up, and for corn, I think we should be going at least to 420. But I personally kind of think that if the rally comes, we will see again 500 being reached. So the opportunity is really, really amazing. But don't trade it. Invest on that if you want to make long-term profits here. In general, this is the forecast. Of course, I will update about everything on the daily forecast. Now, I want to take this opportunity and I want to invite you to a very, very special event we will be holding during the next weekend. Me and my very good friend Nicolas. Nicolas is full-time trader and money manager based on Elliott wave strategies. Now, the truth is that I was trying to learn more about waves during all my years, and for the very first time, everything started to be clear to me. How to use it together with my divergences and convergences methods was after I met Nicolas. In this event, you will understand all you have to know about the Elliott waves and about my strategies that could be used with the Elliott waves things. The most very surprising things I will share with you here would be ABCD within divergences world and the Nike pattern. Stay tuned for my next emails and updates during this week, but make sure you're not missing this meeting. Trust me, you will never regret for being there. There are two ways to be there: live, and you have to reserve your seat, of course, for that, or just the recording, and both of them, of course, are okay. You get the recording 2 days. Okay, it's 2 days, full weekend, right? 1 full day with Nicolas, 1 full day with me, and you get also, of course, the recording of that, so you can enjoy from that as many times as you need. Go to this page. Let me show you. Okay, this is the site. Okay, you can just go on it. I believe you got the email on your box, so check it there. Watch what we will talk about on the YouTube video we've prepared for you, and I hope to see you there. And you have my word, you will never regret for being there. We prepared something very, very, very special for you in this event, and the most important thing for me to say, why we are doing that right now, we are doing that right before the autumn is coming, because we both believe something is about to hit on the market. There are going to be amazing opportunities, and after you understand my methods and Nicolas' Elliott waves methods, you will understand how the long-term cycles on all the pairs you want to see are bringing us to the conclusion something is about to happen. Be sure to be there. Watch the invitation video. It should be on your email. And on this opportunity, I would like to thank you for watching this video. And I wish you a wonderful week. Good trading. And if you have any question about the market or this event, don't hesitate to contact me. You have my Skype, you have my email. I'm there for you guys. Enjoy your week and the rest of the weekend. And I'll see you around. Bye for now. Vladimir.